The iTrade just hit its first real maturity test, with global markets undergoing a violent mechanical deleveraging. The growth at any price era is dead. And if you're still holding the wrong names, you're at risk. I'm purging these from my coverage. They failed the 2026 stress test. First comes Intel, due to excessive capital expenditure requirements. Cisco, because that legacy debt make it impossible to compete with linear AI-first themes. Third, Hewlett-Packard Enterprise, as the debt-to-equity nearing 0.8 leaves them no room to survive a slowdown. Western Digital, because the debt becomes little the moment the memory cycle turns. And finally, SOXL, that is not an investment, it's a casino now. Trying to use 3 times leverage in a mechanical flush is a mathematical death trap, so liquidate it. Now you're probably wondering how I arrived at the list. It comes down to running every position you hold through 3 strict filters. We talked about it in my previous videos. First, the debt cap. If your chipped stock has a DE ratio about 0.5, it's just a liability in this high rate environment, so you cut it. Second, the capex to revenue test. If their cash burn is outrunning their contracted backlog, they're just borrowing to fund growth, which means they are fundamentally broken. And third, is the stock driven by commodity memory cycle? Because if it is, these interest rate headwinds are going to crush their margins. Instead of holding those, you should be rotating your capital into 2 buckets. First is infrastructure anchors, as we mentioned in my previous video. NVIDIA, Broadcom, TSMC, and ASML. They have the contracted backlogs and the cash piles to dominate the next cycle. The second bucket is your defensive fortress. Specifically, look at names like Air Lilly for steady healthcare demand, or Apple, which hold massive cash reserves and consistently passing Sharia screen filters if we're talking about halal investing. These aren't just stocks, they are the bedrock of a resilient, ethically minded portfolio. Ultimately, don't abandon the market, you just tighten your standards. You can use a 3-tile entry strategy at 1/3 now, another third on the next tip, and keep the final third as dry powder. And if you want the full breakdown, comment halal 12 below my audit spreadsheet. Let's get your portfolio cleaned up before the next move.